Hi, my name is Dan Keppel. I want to be your money coach. I just retired from 25 years of managing sales programs in security firms, banks, an insurer, and my own consulting business. In my videos, I want to show you alternatives to purchasing the sales products that are offered by these companies. I believe that when you buy discount financial services, you can save on commissions, charges, and fees. You pay less and earn more. And you can learn how to use Warren Buffett's strategy.
What is the Buffett strategy? We buy low-cost, high-quality, diversified investments. We don't need to pay brokers or advisors to tell us the future. We have the Buffett strategy, and we can earn more from our money. We can achieve any money goal, buying a car, home, business, retirement fund, by using the Buffett strategy. Buffett told Reuters News, a very low-cost stock index is going to beat a majority of the amateur managed money or professionally managed money. So what do you use for your retirement plan? When you are investing in any pension, 401k, 403b, IRA, you are investing for the long term. This usually means any time greater than 15 years. Buffett says buy a low-cost stock index mutual fund. That way, we avoid all the high fees, charges, and commissions, period. If our job has no retirement plan, we can buy a low-cost stock index mutual fund at Vanguard or TIAA CREF. That means no broker, advisor, or traditional brokerage firm fees. Why an index mutual fund? Because while the average investor earned just 3.69%, the stock market earned 11.11% over the last 30 years, according to an unbiased Dalbar study. Brokers, advisors, any salespeople want to be rich, not smart. When you give them money, they win and you lose. Over time, their charges, your costs, take 63% of your potential nest egg. Index funds mimic an index like the ones in this chart. The top two lines are the total accumulated returns of some stock and bond indexes. This chart from Dr. Campbell Harvey at Duke shows the growth of different investments. The top line is small capitalization stocks like E-Trade Discount Broker. The second line, large cap stocks, usually those of the largest 500 firms. The third line, U.S. long-term corporate bonds, reflect the borrowings of large firms. The fourth line, intermediate term government bonds. The fifth line, the U.S. 30-day government T-bill. And the sixth line represents U.S. inflation. Despite recent values, residential real estate earns less than 5% between the third and fourth lines. When you buy a broad stock market index fund like the 500 index, you benefit from the overseas earnings of the top U.S. firms. Half the profits of the largest 500 businesses come from overseas. So why does Buffett say buy and hold a simple stock index fund? Write down Buffett's second maxim. The stock market is a device for transferring money from the impatient to the patient. Most investors jump from one popular security to another just in time for them to go down. So they earn just 3.69%, paying more for less. Buffett has been patient for over 40 years. His $6,000 savings from paper routes has grown to $72 billion. Look at what a difference it makes earning the average 3.69% per year versus the stock market rate of 11.11%. The tiny red line at the bottom of this chart is what the average investor has earned over 25 years. The blue line is your retirement fund using Buffett's strategy. I love Buffett's famous saying, "We continue to make more money when snoring than when active." Trading and timing the market only helps your brokerage firm earn commissions and fees. Instead, you can become a Buffett millionaire by doing nothing, snoring. When you read about any stock or fund beating the market, remember this: only 2 out of 2,862 broad domestic stock funds were able to outperform their peers consistently over 5 years, according to an S&P Dow Jones Index study. Wall Street takes over $560 billion from our earnings every year on the promise to provide above-average returns, but trading securities does not benefit us. Buffett summarized his experience in achieving $72 billion from 6,000 over time. My wealth has come from a combination of living in America, some lucky genes, and compound interest. Costs destroy your money's ability to compound. Compound interest is money earning money on its earnings from the last period. But it only works if costs are low. Instead of earning the market's 11%, you're lucky to earn 5% after commissions and fees take 2%, trading takes 2%, and mistiming buy-sell takes 2%. So, use Buffett's strategy to maximize your pension. Avoid fees that can take up to 63% of your total accumulations. In the next video, you learn how much you need to invest in your retirement fund using the miracle of compounding and the Buffett strategy. For further information, go to dankeppel.com. Our next video is, how much do you need to save in your pension?